Hey traders, checking in on the stock market today. So things slowed down a good bit from the high volatility, high volume day yesterday, but overall the bears are keeping their short-term control as we rejected from some key resistance levels. We will look at what those resistance levels are. We're going to look at a bunch of beat up daily names that we're scouting, daily oversold bounces on, and we'll go over a trade on Netflix. Stay tuned. So lots of daily inside bars out there, SPY as well. If the inside bar breaks bull, our daily high or low is set. So again, we're viewing this as the low of the fear dump, high of the bounce, trying for a higher low, but we have to see the inside bar break bull. If the inside bar breaks bull, our daily high or low is set, and we are then going to scout a lower high into next week, into next month for a continued tightening range. That's if we get the higher low. If we break support of 433.85 and 432.94, we are looking right back down at the low of last week as our only nearby support level in play. So still can absolutely form a tightening daily range, but bulls would have hoped for a bit more follow through today, and they failed. And it was a very clear resistance level we were watching using the futures chart, SPX 500 USD this morning. And we had a 15-minute rising wedge break bear in pre-market, which marked our 4-hour lower high being set. And then we said, okay, 4-hour lower high is set. If the bulls are going to prove anything to us on this bounce, we must confirm a 4-hour trend change with a higher low and a higher high. And we just flat out failed to do so. And if you look at the 5-minute time frame this morning, we saw a low of the day, a V-shaped move to the high of the day. We failed that resistance, chopped around, failed it again, pulled all the way back to the new low of the day. Let's try again, bulls, all the way back up to resistance. You can clearly now see this is a resistance zone with many rejections today from this zone. So this is going to be the key zone. And we can very clearly say that the bears still have complete control, keeping in mind that it is the bulls that have the burden of proof in the short term to prove to us that they are regaining momentum. If they do not get over this resistance zone, then the bulls don't prove anything to us. So if this 4-hour lower high remains as resistance, then the bears have control. Upper wicks rejecting, and overnight tonight, we'll see if we remain within this tightening range, and it'll be up to tomorrow to give us a clear break one way or the other. And again, if that gets a bull break, our daily high or low is likely being set, and we're going to look for the tightening daily range to then shape up. QQQ broke bear. And if you look at the Nasdaq futures, it was a very similar 4-hour bounce. But we set that lower high and then dropped back down this morning to a lower low. So the bears are keeping control. Yes, we did not get notable follow through under the low of yesterday, but we closed weak. It's the lowest close that we've seen in a couple months, month and a half or so. So again, the bears keep complete short-term control. Keep in mind, even if we bounce from here, we've got a lot of space under that last daily lower high. So we could see QQQ from here bounce 3% and still be scouting a daily lower high. So keeping a close eye on the downtrend on the daily as our guide. And it was the same thing on QQQ this morning. When I was live streaming, the one thing that I kept saying over and over was, after this bounce back to the high of the day, great, nice move by the bulls. We must confirm a 5-minute trend change. A bull move or a bear move fast and hard in one direction is great. But if you do not confirm trend changes after it, it is just a short-lived move that fades back. So we set a higher low, we failed, and then the bears took complete control over from there. And it was all about the inability to confirm the 5-minute trend change. You have to establish a support and then prove that you can follow through from there. And as I used to say when we were in the very bull market, the bears would sucker punch the bulls and then the bulls would gather their wits. So this is a sucker punch to the bears. And then as soon as the bears were ready for it, you have to prove it, which the bulls did not do. And the bears controlled the day and a drop into the close. We do have a double bottom down at the low of today, but we would need to see a notable shift in after hours trading for that to mean anything. Healthcare sector did bounce today, so it was helping the broader market to stay a daily inside bar. But again, another name where a lot of space for a lower high. Anything under 133.29 is going to be a daily lower high on the next bounce here. So the bounce is currently underway. but there is still a lot of space for that daily lower high. Semiconductors, look at the volume. The volume is telling us this move is for real as far as the bears proving it on the confirmed daily downtrend. Our weekly support still remains 249.35 as our higher low, and there is a potential daily oversold play here off of that support level because we're still 3% above it, and the daily RSI is in the mid 30s. We would pretty much be seeing the daily RSI getting right to 30 if that support level does come into play from here. So keeping an eye out for that potential bottom fish. Hourly bounce into the end of the day was weak. So we got hourly downtrend and daily downtrend as our guide. And again, this is where a lot of traders get confused because we have tons of names scouting monthly higher lows, but we've got daily downtrends and hourly downtrends. We've lost weekly uptrends. So what do I focus on? What's the most important to me? Well, it depends on what you're looking for. Are you looking for a swing long-term position for a monthly higher low? If that's the case, then you're not worried about trying to nail the bottom. So for example, if I'm looking for SPY monthly higher low, I don't need to nail the bottom. I can be looking to position myself in a number of ways. If I want to be a bit aggressive, I can make an entry here and then just put my stop under the low. And if I stop out, then I say, okay, well, the monthly higher low has not been set yet. And I limit my risk and I'm back to all cash and I can try it again at a later time. Let's say QQQ, I want the monthly higher low. I can wait for a big enough bounce on the daily and skip that whole bounce, knowing that we're going to have to confirm a daily trend change if a monthly higher low is going to be shaping up. So we're getting close to the end of September. We started off September talking about how historically it is one of the more red months out there as far as the market and looking back, and it certainly did not disappoint bears this time around either. The quarter is coming to an end. 2 more trading days. 1 more trading day. 30 days in September. 1 more trading day in the quarter and in the month. And the bulls are hoping to forget about the red September. XLF, so I still have my half FAZ swing position and didn't really act on it today. Not really a whole lot went on. You know, the range of the first 15 minutes, that was pretty much the range for the rest of the day. We did see a new high of the day by a penny here and there, but never any follow through. I did place a stop with some wiggle room that just didn't get triggered. And pretty much in equilibrium. But bigger picture, we know this daily consolidation absolutely still favors bulls. And you look at a name like BAC, it's coming off an all-time high, and it's a potential daily bull flag. So the financial sector bulls are still very strong, and I will exit that position fairly quickly. And someone asked a good question today, why am I in XLF short if it's the strongest sector? And the answer is risk and reward. Because yesterday, everything was most things were gapping down open, and XLF was opening right at resistance. So risk and reward. I have a very clear stop level. I'm playing off of resistance. If I short a gap down on QQQ, where does my stop level go? There's nothing nearby. So it's a lot harder to quantify the risk and reward. Whereas I could say with XLF, okay, clear resistance. If we start daily consolidation, then the reward will be well worth the risk. So opening right near a key level was the reason for choosing that short. And if we break the high of today tomorrow, I will be out of that short. IWM still pulling back on the daily. A lot of space for a higher low compared to 214.22, but the growth names are definitely seeing weakness. And we will look for that higher low on the daily. It's correlating with XLF, but it's a bit weaker. The bulls will have to confirm a trend change back in their favor if we're going to be looking at the all-time high. But across the board here, XBI, bear break on the daily. No weekly higher low being set, and we're looking back down at our double bottom of 118. Another potential play off of that level, especially if we approach it. Approaching daily oversold conditions, just like last time. Wasn't daily oversold, but bounced right off that support. So weakness in the biotechs, weakness in solar. All about 77.20, another potential bottom fish. So again, whether I'm looking for these kind of bottom fishing plays is a lot based on where am I at as a trader on the month or the year. Do I have comfortable profit cushion to work with and I can be a bit more aggressive and I can enter, can I enter TAN for a swing trade playing off 77? And if I stop out, it won't impact things in any meaningful way. If that's the case, then maybe I am being a bit more aggressive and entering into the weakness, into that support. If I'm struggling as a trader over the last month and I can't find my flow and I'm giving back some of my profits on the year, then that's not the trade that I take. I want to have a higher probability setup. So keep that in mind as well. I will take different trades based on where I am at in my flow state. And aggressiveness or conservativeness will determine that. It will help determine that. ARKK, the weekly equilibrium broke bear, and it's been nothing but downside since then. We had the double bottom at 113 break. Nice follow through for the bears, multiple percent at this point. So again, growth names, PLTR confirming a daily downtrend. Very significant shift on the daily. Growth names are not having a good week. MSOS. So the MJ sector, I mean, the only thing you can look at here and say, well, we're not at our lows with market weakness. That's one benefit. But we did get a bull break on the daily with zero follow through, which is a bit concerning. There's high bear volume today. And if we lose 30.75 support, the daily uptrend is lost and our weekly lower high will be set. Anything under 33.46 is a weekly lower high. So bears are still in control here. Looking at the Canadian side of things, CGC fading back down towards the recent low. TLRY failed a daily trend change, heading towards the recent low. So the MJ sector is still weak as well. Again, the only thing USMJ has is we're not at the lows. That's about it. A lot more proving to be done. IIPR is close to losing the weekly uptrend. The dollar is still breaking out, following through. Monthly, weekly, daily, 4-hour uptrend across the board. We broke 94.30 resistance. Now 94.74 is the next level, and there's a lot of space for healthy consolidation. The 4-hour RSI is definitely overextended, so we're going to be looking for 4-hour consolidation soon. The metals are getting hit hard. Gold, fresh lows. Still keeping an eye on this downtrending support on the 4-hour time frame. But we need the dollar to consolidate and we need the gold bulls to show up right now if this support level is going to hold. Again, we are still looking for a weekly high or low. And there is still a good amount of space above that level. But there's no sign of that weekly high or low at this point. And it's only 2.5%, 3%. Silver with a very clear bear break. Look at all these touches of 22 that finally broke and triggered a bunch of stops. Triple bottom at 22, rolling over. And again, I'm grateful that silver gave us the red flags early on. Silver's red flag for me was August 9th. Monthly downtrend confirmed. And that is why I've had zero interest bullish metals or miners since then. Monthly, weekly, daily, 4-hour downtrend. Next time we bounce, our daily resistance is 22.85. And it's just the fundamental narratives not playing out as far as, printing and silver squeeze and all this stuff. It's in the charts. Bears in complete control of the metals for now, as long as the dollar bulls are in control. So some really beat up charts that I'm keeping an eye on. And it's really important for me that the broader market bounces and alleviates fear if I'm going to be looking to play any of these names. The other most important aspect about these charts that I'm about to look at, I don't care at all. It's hard for me to fully convey how little I care if I miss these bounces. So what does that mean? It means I'm extremely picky and the trade comes to me exactly as I want it, or I don't take the trade. So ADBE, and again, I have to see broader market strength. Because I know all we have to do is look back at the COVID dump. When there is fear and things get extreme in the broader market, individual names can get absolutely crushed. And RSI levels can go out the window and fundamentals go out the window during that fear. So for ADBE, the daily is beat up. We've had a waterfall drop. We are looking for a monthly high or low. We had a weekly stair step. Again, that strategy would have been a really good one once we broke the pattern of a higher low every week. So waterfall drop, scouting a bounce, but there's no sign of that bounce yet. Hourly lower high set into the end of the day. A little bit of a base of support is trying to be established at 576. So it's the kind of thing where if we open tomorrow at 580, maybe I bottom fish 576. Again, same thing. Do I feel like being a little bit aggressive and a little bit more loose? Or am I struggling to trade right now and I'm not just going to be throwing darts? If that's the case, I'm going to be a lot more selective and picky. But if I'm feeling in the flow and a small stop out for a day loser or a half a day loser won't matter, then maybe I bottom fish that low. But it's another one where I can wait for an hourly trend change to try and shape up so I have a support level to play off of. The last thing I want to do on any of these charts is just scale into weakness. Because again, what if SPY rolls over to another leg down? That means I'm in trouble. So I have to have a support level that I'm playing off of on these really beat up names. So I'm watching ADBE, I'm watching FDX, just a free fall drop for the daily RSI in the teens, and the monthly is coming straight off the all-time highs into this drop. So scouting a bounce, but it's a lower high each day. Hourly, weak bounce into the close. Maybe we'll have a bottom fishing level to play off of. SAM is the last one we're looking at. Look at this drop from 1350 back in April, and here we are 5 months later, down 61%. Monthly waterfall drop. Daily bear break starting to lack follow through. It's a falling wedge starting to shape up. Broke support into a bounce, broke support into a bounce. Anything under 532.12 keeps the bears in complete control. The daily EMA 12 is a nice guide, but I'm keeping an eye out here. And again, it's another one where if we pull back, maybe I make a bottom fish off 500 for an hourly high or low and see if the bulls can confirm a trend change. So if SPY sees an inside bar bull break and starts to tightening up a daily time frame, maybe I make an attempt on one of these oversold bounce plays for a swing position with a stop loss nearby. Keep in mind, we have risk and reward. The higher risk, the higher reward, generally speaking. If you're bottom fishing or playing off of a support, your risk is small and your reward is much larger, but your probability of stopping out is high. So if I'm trying to bottom fish these dumps and trying to nail the bottom, the probability that I stop out is fairly high, but the risk is fairly small. So it's a trade-off. There's trade-offs all over the place as far as trading is concerned, and that's one of them. So I think I like Sam the best in the short term to keep an eye on, and we'll keep checking in on it periodically as it tries to shape up this bounce. So all about our S&P 500 4-hour futures chart resistance, daily inside bar on SPY if we want to keep it simple, and we'll see if XLF is a daily bull flag. Broader market bull is certainly hoping so. We need a hero. We need a hero as far as the sector is concerned, and XLV and QQQ are not providing that strength at this point in time. So we'll see if XLF can do so and try to get back to all-time highs. Don't forget to do good things. Hope you have a good day out there. Had a good discussion today with a Uber Eats delivery driver, and she is a gardener and interested in crypto, which automatically means we are friends. So gave her a nice fat tip to put towards Bitcoin, and hopefully that sparks an interest as far as doing some research and trying to get into markets. Because one thing that I'm trying to convey to everybody is there's no way to get ahead in this monetary game unless you find a way for your money to turn into more money. And that's why this game of markets is so popular, and that's why all of the most wealthy people and powerful people in the world have significant contributions to their wealth through this game. See you soon. Forgot the Netflix trade review, so do a quickie here. Netflix, we pointed out a couple times how it is a lead bull as far as its weekly chart. We had a key break of the double top at $600, standing strong, testing all-time highs, and I was playing the hourly high or low. So I looked at this hourly consolidation, and I said, that looks like a bull flag. And I then was watching it and looking for an entry. Break of 600 psychological, I almost entered there, but I wasn't confident with where the broader market was. And then we bounced and set another lower high, and then we double bottomed. And as soon as that double bottom hit, I said, okay, low risk. Again, same thing as I just said. Low risk, solid reward, high probability of stopping out. So I'm in at 601, low 601s, and I'm looking for a move back up towards the high of the day. So I know that I needed to see QQQ bounce at that point in time if it's going to help me with that trade. And Netflix at that point, the bottom was 135, and QQQ at 135 was right here. So I said, knowingly, if QQQ does not set a low of the day here, I'm going to stop out of this trade. And I knew that I need a little bit of luck for QQQ to bottom out and to see bounce follow through. We had a downtrending support line here, and that's really all that I had to go off of. Say, all right, we need a bounce. And then, of course, this was beautiful timing. Big bull move on QQQ, and that helped Netflix head back up to 607. I took half the position off in the 605s for a decent win. Can't lose on the trade at that point, and I wanted to hold to swing the second half of Netflix for the potential of an hourly bull flag. But the broader market did not convince me to swing. So I placed my stop at 603.99. And while I was live streaming at the end of the day, distracted and looking at other things, I stopped out of the second half of position. So both half positions in profit. Nothing notable, not a huge win, just a solid little win towards the end of the day. And again, it was a play off of the hourly higher low, looking for a bull flag. If this level holds, it's an hourly bull flag possible. If it does not, I'm wrong and I want to stop out. And my stop on my entry was at 599.49, giving just a small amount of wiggle room.